Well, hello everybody, and welcome to 2026. We are back at Best Fit Real Estate. I hope everybody's had a great 2025 end of the year and it's getting the
Mhm.
new year started well. I'm here, of course, with the founder of Best Fit Real Estate, Jay Bingham. Welcome, Jay.
Thank you.
He is trying to change the way you find your next agent. And our next guest on the show is Kerry Lopasky. Kerry isn't just a top tier national lender with Texana Bank, but she's also a licensed realtor in Jupiter for the market. So we're going to get a little bit of the out of the cold weather and into the warm weather market news. She sees deals from the news, all the way from she does them from all the way from final signature to the closing table. She knows everything. She's been in the business a long time. I know Jay's been dying to kind of pick her brain on a dual perspective of working both sides of the fence for buyers and sellers and things like that. So I will hand it over to Jay, and we'd love to hear from Kerry and get an introduction as well. So,
Hey, hey, everybody. Hey, Kerry. Thank you so much for joining us. I
Hi,
really want to
Jay.
just, hi. I want to just get an intro from you in your own words, because I find it really interesting that you are a double threat in mortgages and in real estate. You've helped me a ton in South Florida, and you know the market really well, specifically Jupiter, but really probably the entire Palm Beach area. So I want to get an intro from you, background, company, and why you work both sides.
Oh, yeah. So long ago, I'm not going to say exactly when, but many, many years ago in the 90s, I started out in the mortgage industry. And as I was doing more and more mortgages, I realized that real estate was a big part of that, right? People are buying houses, they're coming to get a loan. And how does that work? How does it meet together? So I decided to go ahead and learn more about real estate because I thought that would help me more with financing and looking at contracts. It blew up from there. Once I got my real estate license, I just started doing dual transactions, and I found that it helped my customers and it helped us to the finish line way faster because I was a part of everything. So I was able to push things along much easier than having it different parties and having to go all over the place to find things, especially documentation. So yeah, and that's pretty much what I've been doing my whole adult life.
And nowadays, are you focused more on mortgages and helping people with the lending side, or more on realtor stuff?
Well, I would say I still get all my realtor training because I have meetings weekly with my real estate broker, but my passion is really in finance. It always has been. I love doing loans. I love telling people how to. Most people are afraid of loans because they're like, how do I even know if I could get a loan? So
Right.
my favorite thing is putting the puzzle together and like telling people, right, like, how do I do this? Like, where do I start? And we could go way into this, but my first thing would be like make sure you have a good income and make sure you know what your credit report looks like.
Okay.
Two major things.
I actually want to forget about some of the questions I had started thinking about asking you first. Because you brought it up. I
Mhm.
wanted you to talk about the importance, because this affects both sides, being the
Mhm.
realtor and being working with a lender. The importance of having a pre-qualification letter when you go and look at a house, or that your realtor
Mhm.
has a pre-qualification letter. I think that's what they're called. I mean, I've had a million of them, but they're called
Yes.
different things. But basically, just a letter from your bank or your lender that shows that you qualify for the house. Can you talk about how important is it to have that letter on you when you go
I
look
would
at that
say
house?
I would say as a realtor, for me, very important because my time is my money. I don't get paid unless I help you find the right house, put you in the right situation. And if I help you, I get referrals because I did a good job for you. I'm going to get a good job. I'm going to do a great job for somebody else. I would say that having that prequal letter puts you in, if there's three offers and you have the prequel letter and the other two don't, guess what? Your offer is going to be taken seriously from
Your
the
offer will
seller.
be accepted. Your offer would be accepted first, even if it's a little less than another offer, because you came prepared with
I
that
mean,
letter.
not always. You can't say that because it depends on the situation, but I would say that you are in the higher end of getting your offer accepted because you have that and you're
Interesting.
ready to go. And
Okay.
I would say more than a pre-qualification letter, I would have a pre-approval letter. And the difference is, if you want me to get into that, I can
Yeah,
tell
no, I
you.
do, because that was the other one I was looking for, the pre-approval letter or the approval letter. So go ahead. Yeah, for sure.
Okay. So pre-qualification basically would be I would be talking to you and I would just have a notepad and I would just be writing down some notes like what's your income, what's your assets. Just a little drawn out kind of conversation that you and I would have. And I would see if your debt to income ratios fit the program that you're looking for or that we discussed and that I put you in. A pre-qualification would mean just that. It's a conversation. It's a letter that I would get from my bank saying that we've pre-qualified you. You know, there's still a ways to go, but we've pre-qualified you. You look pretty good. A pre-approval, on the other hand, I would say, well, can I get your pay stubs for the last month? Can I get your W-2s from the last years? What kind of assets are we looking at? What kind of down payment money do you have? Are you paying, are you going to pay a big portion in cash? And then I will take that and I will get like a pre-underwriting done at the bank itself.
Okay.
An underwriter will actually look at it and say,
Mm.
they are ready to go. All we need to do is update this stuff when the contract gets further along. And as long as everything stays the same, we're good.
So I also want to say it can be even a level easier than that. I work with a financial advisor, a big household name financial advisor, and we're at the point, Jen and I have shared accounts with them. I can just literally go to their portal, put in the address, and based on all the assets that I have with them, all my savings, my stocks, my real estate, they will generate a pre-approval letter for me because I have a relationship with that bank. That would be a pre-approval, right?
Well, if you haven't provided them your pay stubs and your income information, I would assume that is just asset based.
It's asset based, but it's actually, we actually wrote our mortgage. I mean, it's Morgan Stanley. We did that with this house that we live in right now in Denver. We just got the pre-approval letter and we ended up writing the mortgage through Morgan Stanley. That's our mortgage
and you can
provider.
do that, but at some point you had to give them like W-2s and pay stubs or business papers down the line. Now, because you have a relationship with them, they might let you print out a pre-qualification or a pre-approval. I'm not sure what it is that they're going to let you print out.
From what I remember, it was on the around. It was pre-approval, but I could be wrong. Yeah.
I'm not sure exactly how that would work with Morgan Stanley being they have everything of yours. Maybe they can see all your deposits and they might just be able to go by your deposits, your income deposit. So that would make sense for that. But in the other world, like if people are just coming to a mortgage broker or going to a regular bank for a loan, there is a difference between the pre-approval and the pre-qualification.
I think the point here that I'm trying to make, and you're illustrating it perfectly, is don't just send your realtor into the house or don't just go in the house not prepared. If you are serious about making an offer, have that in your hand. Have one of those things or both of those things in your hand. So I'm
a strong advocate. And you know what? Sellers don't want just every random person coming through the house either. Just because they're driving on Sunday and they just happen to want to pop in and have fun and see houses for the day. But it's a lot because that person without a pre-qualification letter even, or that just doesn't have that. Because if I'm your realtor and I'm showing you around and I'm taking you to other realtors' properties, if we're not serious, it lets them know you're serious. Because if we're not serious, we're wasting their time when they could be talking to another potential client that's coming to the open house that really is interested. And we're not taking up, we're not taking it away. So that's where that letter comes to be important. Because the first question the realtor is going to ask me is, are they pre-qualified? Do you know? Before I start going through everything.
I mean, look, I don't mind sharing this with my audience. I'm an open book. Kerry is right now actively looking for a place for me in South Florida in the Jupiter area. And I'm going to be getting her a pre-approval letter actually later this afternoon.
Thank you.
So I know how important it is. It's super important if you want to be taken seriously. So with that said, I kind of want to move on. Will, did we leave anything out there? Anything you want to cover?
Well, I guess, kind of lends into another discussion. You discussed buyers and what their demands are and kind of what they do. Has you seen that change since the market shifted a lot in the last couple of years? Are they getting more tolerant? Are they putting up with more things and reaching for more buyers? Or is it, in your area at least, pretty can buyers be a little bit more picky and demanding?
Well, in my area, actually, buyers don't have it's really a seller's market here right now.
Really?
As Jay knows, there is very little inventory in price ranges that are affordable for the average middle class American. So, like in my area, for example, in the Jupiter, Florida area, it is very hard to find a 3-bedroom home for less than $650,000. That'd be, further away from the coast. It would be further inland. When you come closer to the coastline, And I'm not talking about right on the beach or anything like that, but within a few miles of the coastline, you're definitely going to be more like 750 or higher. Unless you're in a townhouse or a condo. But for a single family house, it's really starting to become almost unaffordable for the average American. But
Yeah. I think that's
I
unique.
think
I think real estate's hyper local. I think that Jupiter is a little bit different than
yeah,
Denver right now. Like
hmm
it is shifting to a buyer's market in a lot of places, but in Jupiter, Tequesta, on Beach Gardens, yeah, I know because I look every day in that market.
yeah,
It's tough to find a great clean house, a 3-bedroom, 2-bath house with a 2-car garage
yes,
for less than $600,000 in a neighborhood that I'd want to be in anyway.
right. I mean, if you have it's different because if you have little ones, it depends on what your needs are. I think although our market is pretty high right now, I do see it leveling off. I do see it leveling off. Do I see it taking a dive? I don't see it doing that, but I
You
do
see the
see it
market in South
leveling
Florida
off.
or Palm
I
Beach leveling off?
just Palm Beach County,
Okay.
in general, I think even across the US, I think we're going to see a leveling off this year. I really feel like that's going to happen. And when it levels off, there'll be a little bit more inventory. And, when there's a little more inventory, what happens is,
Mhm.
a lot of times the interest rates will, you know, keep on gradually going down a little bit. When the inventory is high, they raise it up again because they can,
Yeah. There you go.
you know?
So there's a lot of people obsessing right now over the interest rate. I know today Powell did not lower the rates. He's seeing like a steady
Mhm.
economy. And this is, today, the date of
Mhm.
this podcast is January 28th. And there was
Yep.
news just today that
hmm
interest rates are staying. So
Yep. No
question for
cuts
you.
today.
What's that?
No cuts today.
No cuts today, right? So generally speaking, as a national lender,
Mhm.
people obsess over like 6.5 or 6.1%. Is sort of the date the rate advice valid, or smart buyers using ARMs, 15-year fixed, 30-year? What's your just general
Oh boy.
30-second or
That's
less?
loaded. We could take
Yeah.
a whole nother podcast on interest
Okay.
rates and what I think, because as a mortgage broker lender, I mean, I'm a mortgage broker salesperson, but I also work for a federal institution, which is a national lender. So I have the best of both worlds because we can write some stuff in-house, or I could send it to a multitude of different brokers that we're associated with, like
Okay.
over 50 to 60 different lenders. So I would get to know you as my client and your situation. If you're going to stay in the house for 3 years and you're going to move because you're a person that moves a lot, maybe you're a pipeline, what do they call the guys that do the electricity? The line.
Like a
Lineman, yeah.
lemon.
Yeah. So like those guys, they move around a lot, right? Depending on where they're doing their project. So if they're staying in the house for 3 years, if the arm rate may be lower, like a 5-year arm, and they're going to just turn around and sell their house. So why do a 30-year mortgage?
Okay.
Take advantage of a lower rate. However, in saying that, right now, arms and fixed rates are kind of not too far apart. So it's
Have
going to,
noticed that ARMs and fixed rates are not that far apart. I've
that's
noticed that
right.
as I've done the research with you, and I actually spoke to Morgan Stanley. I spoke to their lending department. I asked them, and he said, there's absolutely no reason to do an ARM right now because the interest rate is so close. Just do a 30-year mortgage so you have that safety net. If you want to pay it off
Yeah.
early, pay it off early,
Yeah,
right?
because every loan that I do, I give my client an amortization schedule,
Mhm.
which is like how much interest, how much goes to principal each month that you make a payment,
Okay.
right? So you could make, double your principal payment and get that loan paid off so much faster anyway, even without, doing anything. You could
Okay.
take that 30-year, they even have 40-year fixed conventional loans out there, certain lenders. But I mean, I always say take the longer loan if you can, because God forbid there's a circumstance that happens, you can make that lower payment. But if you have extra money, then pay it off sooner. I think
Yeah.
that's great
I think
to
that's
be able to
solid.
do that. But
That's
just,
solid advice.
yeah. And I always specify to the client too, to make sure that you let your lender know that you're making an additional principal payment to principal so that it doesn't go to a regular mortgage payment.
So it's chopping down the principal instead of the interest.
Yes.
Yeah. Okay. Uh, What's the biggest mistake you see buyers make when they go to a big online bank instead of a strategic lender who knows the Jupiter, or in my case, the Denver market?
You know what? I don't think that's a huge thing when it comes to lending, because it's really the person's financial situation, their assets, how much money they have for down payment. That's really key, and what their credit score is. Because I could put you with a lender that's in Hawaii. It doesn't matter to them where you live, really. I mean, except for that, your homeowner's insurance may be higher if you live in Florida. So those things will make you less likely to qualify for a loan, because you have to include those things in a debt ratio, which is your income versus the monthly debt.
Okay.
So that would really be it as far
Okay.
as the lending prospect goes.
Rate buy down
Mhm.
versus a price cut. If a seller gives a credit, which one actually keeps more money in the buyer's pocket long term? Which one do you like? Bottom line.
Well, I just did a loan for actually another friend of mine, and I did a buy down. I did one of the things that I can do, because I do work for a bank and I am also the mortgage salesperson, is that there's a certain amount of money that brokers, salespeople, and the bank makes. Now, because my bank can keep some loans in house, they can actually sometimes give me a better deal if I stay in house. Like, they could give me less off the rate. Yeah, the bank won't make as much. I might not make as much. But if my client needs that to qualify, that is key. Because it could be $100
Keeping the
that's
mortgage
throwing.
within, say, your employer, Texana. Is that right?
Yes,
So
Texana
keeping
Bank.
it. What's the advantage again?
If they hold the loan, if they buy the loan in-house
Yep.
instead of giving it to another mortgage brokerage or another lender, I guess I should say another lender, not another mortgage brokerage. But if we outsource it instead of keeping it in-house, we don't have any negotiation power there as much as we do if we keep it in-house. We could be willing, I could talk to my branch manager and say, listen, we're $100 off. It's blowing this customer's debt ratio. Can we by chance make a little less just to help them qualify? So my bank manager, he'll go to the right people in the bank, and, if we could do it, we could do it. But if we can't, we can't. It just depends on the rates at the time, the pricing. There's a lot involved on the back end that the normal consumer wouldn't see. But those are little things that can help a borrower that's struggling.
Okay.
Yeah, speaking of like the typical customer right now buying a home, what kind of income is realistic to get a decent home in a decent neighborhood for two income, small family starting out? Like what are you seeing that like you're like, yeah, that's a no starter, or we can probably find you something.
I mean, this is what I normally do. If somebody says, how do I know what price range I'm even going to look at? Because it's almost impossible to say an amount depending on the market and what the house price is. I hate to divert it to that. But what I'll normally do is, like, I would talk to you and I would say, well, what do you make? What are your monthly debts? And once I figure that all out, I start popping in sales prices of homes into like my little mortgage calculator.
Sure, but I mean, like, what are you seeing right now? What are people actually making that are closing loans? That where's that threshold?
Like what
I figure
price range? Like
I
what
guess
price?
just I get again just
You're talking about
what's
income level,
moving.
like what's their income
Yeah,
level?
like for a lot
Oh,
of
you
people
mean the
out there
medium
going,
income
hey,
level of loans that I'm doing right now? Like for a single person, it would be like it, I'm looking at three figures for most of the loans that I'm doing right now. Like to
yeah,
be able to afford uh, a principal and interest payment, their taxes and insurance, and then if they have if they don't put 20% down, they have to have PMI, which is private mortgage insurance. So that has
right.
to be factored in. So there's a lot of variables. So usually what I do is start off with their income and debt and figure out where they need to be price range, if that makes any sense. Like with
Totally,
my
yeah.
prequal, I see where they're standing with their rate, income, assets, and then I let them know what price range they should be looking at as a mortgage as a that's kinda what I look at, like, what they can afford.
Yeah.
Like,
I
if
think
it's
I
a
just
two-household
realistically,
income, it's usually, like, in the 130s for, like, a 3 or 4-bedroom house here, at least, for,
yeah.
like, something like that.
I think that's one of
I
the
mean,
challenges we get when people reach out to us is they're
yeah,
like, "Hey, we
it's
make
crazy.
our household makes 65,000 a year. What can I do?" And really, I think in most housing markets across the country, that's not much, right?
Yeah, and I
Like
would
that
say
threshold's getting kind of out of reach.
yeah, I would say, like, what I normally do is I have, like, a little mortgage calculator. You can get one online. You just My favorite one is on bankrate.com. I really like bankrate.com for, like, a lot of resources, but there's a mortgage calculator on there, and you can put in your income, you can put in your income, you could put in the amount of house that you think you might want, and it'll calculate it all out for you. It'll bring your debt ratio around. And, oh, one more thing people have to consider, especially down here, homeowners association fees. And I know in
HOAs,
Dreaded words.
Westminster,
the
the HOA can
hidden,
the
yeah.
HOA can throw you way off the loop, and you have to be careful with those HOAs because, they could raise things and ruin you from refinancing your loan, like, down the line.
Yeah.
They could
Well, I feel these frustration from people because
Yeah.
we're really active in the Reddit boards and we're active
Yeah.
on, we get people that comment on our stuff and people are going like, hey, my rent's $2,800 a month. This mortgage in this place would be $2,500 a month, but I don't qualify. How am I paying $2,800 in rent? And I've been paying that for 5 years, but I can't afford a mortgage that's less or a mortgage that's the same, right? Like
Yeah.
it's really frustrating for people, I think, right now where homeownership seems kind of exclusive. I was looking at Jay and I were looking
Yeah.
at a chart where the average first time home buyer or the average home buyer right now, I think has moved up
40.
from like to in their 50, almost in their 50s,
Yeah,
or
40 in the
40s in
40s,
their
late
50s.
mid-40s. I
And
mean, my own
transactions right
son
now are
is
mostly
third is
50s. Yeah.
turning 30. He makes a great income. He has a great job. He can't get out of the apartment that he's in because he can't afford a home on his own, and he probably will be able to once he marries, because that'll be a dual income, but a single income right now is very difficult unless you're over if you're over 6 figures, which a lot of people are not.
Plus, I want
I mean,
to ask,
realistically.
how does a regular family or a regular person beat out a Wall Street cash offer or a cash
Mm.
offer in 2026?
Oh, and that's another
Um,
thing we could
yeah,
get into. The big
yeah.
construction companies coming and buying up all the properties and refurbing them and selling them for double the money.
Yeah.
And they'll knock the house right down. In my neighborhood, down the end of the street, they bought a house for I don't know how many millions of dollars because it's on the water, and they knocked it flat, and they're gonna build
A
you know
mansion.
yeah, something
Yeah,
even bigger.
yeah.
They're doing it everywhere.
Is there a lending cheat code to make an offer look like cash? I do remember that when we bought this house, Morgan Stanley said there is a way that we can write this pre-approval letter to make it look like you're coming in with cash. Can you just give us any hacks, quick hacks? Talk to your lender about things like that. I remember specifically.
Well, for you, with Morgan Stanley, it's probably asset-based. It's probably an asset-based lending type of thing. Like, it would be, like, more or less a no income verification that they might lean towards, and it's more like an asset-based. So they'll come in and say, "This is the amount of assets in total that they have. This is the pre-qualification letter. Even if they don't have a mortgage, they could pay for this in cash." That's probably the type of thing they're gonna do. I'm just guessing on that. I don't know Morgan Stanley's what their pre-quals or pre-approvals look like because I really haven't had one come across my desk, but I think that's probably gonna be a more asset-based approval, most likely.
So for the regular buyer, there is just no way to compete with cash offers if they don't have something that's asset based. And you're right, it was probably asset based.
I mean, as a realtor, cash speaks, and if they're needing a fast closing, they're gonna take the cash offer. I would say even if a cash offer is like 5 grand less or even 10 grand less, and somebody can just walk up and hand them a check, and they don't have to worry about inspections and seller contributions and all those things. I mean, I think in the way of the world, I feel like cash talks. I mean, as you know, I even deal with some manufactured homes and things like that. And
Yeah,
people will come in and make cash offers for 200,000 on a manufactured home.
it's
And,
crazy.
and, this, salespeople will be like, sure, can you close today? The money fast in the hand is what is mostly I feel like in real estate, how they mostly lean that way.
Before we move off this topic, Will, it's a big one with our audience. How do I afford a house? How do I compete with cash? Are there any other questions you want to make sure we hit on this topic? It's really big. People just can't afford houses because their biggest complaint
Yeah,
is
I
like, how
I
do I
know.
compete with cash? Like it's the
Yeah.
biggest
I
question that we
know.
get. So
You have to
what do you
be
do?
strong. You have to be I mean, Do you have any words for it, Will? I mean, I just feel like you have to
Robbery
be.
works usually. I think that's probably the first thing that's
Well, I
probably
would
the
just say you have to
recommended
be like
way.
a totally strong. From a long time ago, I learned maybe the hard way back, in my youth. Don't keep a lot of credit card debt. Make sure your credit cards are. If you have $1,000, let's keep it simple. You have $1,000 credit line. Don't use any more than $300 on that card. 30%. And I've been through this with all my borrowers. I counsel them all the time. I'm like, don't buy a car. Like once you sign that contract, don't buy a car.
Save your money, pay off your credit debt,
Yeah,
right?
don't use credit cards unless it's an absolute emergency. That's what they're there for. Don't buy them that's not your money. And the credit card companies are not your friend. They are not your friend. I mean,
Okay.
we could have so many different topics to
I
talk
know.
about,
No,
but
I know it's a lot, but I think
yeah,
as a licensed national mortgage person, I feel like I've got to try to get general advice for our audience
okay.
because every market's so hyper specific. But I think this was great. I think that was a great answer.
Yeah. Credit is key. Credit is key. Definitely 630 or higher. You've got to be, you know, 650 and higher. I mean, there are loans you can do, but you have to learn to get yourself in. If you're not going to be a cash buyer, you have to look hard at yourself and your family and the way you spend. And that would be my best advice, like to people. Be solid. Make sure you have your paychecks. Make sure you know what you're spending. Open up some spreadsheet or even handwrite it. Know what you're spending every month. Put away money. And if pay yourself first, right? You've heard that before. Pay
Yep.
yourself first.
Oh yeah.
Put, you pay a phone bill, you pay this, you pay that. Put money away because the bigger your down payment, the better off you're going to be. Because if you can save 20%, you don't have to have PMI. So your qualification will be easier to have less in that debt ratio.
I mean, we talked about this. I think the biggest question you have to ask yourself is, can I afford 20% of the home that I want to buy? Do I
That's a
have
good
that?
start.
It's a
Yeah,
big
it's crazy.
question. I mean, we all are we're used to instant gratification. Instant thing like I want this. I have to have it. What can I do? But you have to be realistic as a buyer
Yeah, this
because
is a
you want to have
1954
a
where you.
happy life, happy wife,
This is a
right? You don't
1954
want to
where you
be
just had a couple of
arguing about
nickels. You know,
Right.
about finances. You
I
don't.
got I got I got 2 bits over here. I'll take that house on the hill. There, you see, just get them all. Those days are gone.
Yeah, I mean, you have to. It used to be. I mean, Jay knows even long ago when I bought my house. I mean, there was another house down at the end of the street that I really wanted. It was a little bit out of my budget, but I was like, let me take the house that I know I'm going to be able to afford and keep. Let me not take a risk by, even though it wasn't much more. The taxes were a little bit more. The purchase price was a little more. It was closer to the water, so the insurance was going to be more.
I was
You
just
just
going
have
to
to
say,
be
I bet the
realistic.
insurance would have been higher. Yeah, yeah.
Because you can always take a lesser house and you can make it beautiful later on. Like it doesn't have to be all at once. Just right now, be able to start somewhere that is comfortable for you.
Yeah.
Whether that means you're in Denver, Florida, Oklahoma, Montana, whatever you can do to start building equity in a house, because you can always sell that house and take the money and upgrade. Remember, you don't have to stay in the same house your whole life. You don't have to. You can upgrade. So that's a good way to look at it. I would say that would be a good suggestion. Start somewhere, if you are a remote worker, try to find some place where the cost of living isn't as much. Maybe start off there and move up.
State of the mortgage industry right now, January 2026. Would you say it's busy? Or would you say it's struggling? Or would you say it's recovering? Just like,
Yeah, I would say it's steady. Rates right now are between like 6 or 6.5%.
Yep.
So, I mean, I don't see any more cuts coming immediately because we already had 2 cuts. We had 25 basis points, I think, September. Then we had another 25 basis points. So that's like a 0.25%. And right now, today, we had nothing. I don't think we're going to have anything. I don't really feel like we're going to have anything at the next one, but it depends on the economy. It depends on, the workforce. There's so many things it depends on. So we just have to see and just hang in there, people.
Yep.
We just have to hang in there. If you have to rent for another year, just do that, but try to put away some money. That's like my biggest, just, I know it's hard because we're all pinching pennies right now, but let's just hope, it gets better. Things get easier. But, there are a lot of people out there doing very well too. So
Yeah,
it's a
it's kind of
mixed
it's kind of the
bag.
tale. It's kind of the tale of two economies, right? Like there's people that are doing great, and everybody else is
Yeah, there's
struggling. Like you
no,
hit a line.
like I'm in the
Yeah,
middle here. There's no in the middle anymore. It's like here or here. It's like not like
yeah.
years ago. Unfortunately, I'd like to see a little bit more of the middle start coming back in, so where it's not all this or that. But
Without, and I know this is dangerous to even mention the P word, but without getting into politics, I do
yeah,
think I've heard some rumblings of there being a little bit of level setting maybe happening for so that investors can't just buy up every single house on the street and
right.
uh and box out the average homeowner. I do think that that's interesting. I can't wait to hear more about it, but there's a bit of an unfairness happening. I think we're getting off topic, but I just want to say I think that that's interesting, you
Yeah,
know?
I mean, definitely that is, it hurts the average person that just used to be able to, say, "Oh, I think I want to buy a house. Let's go look at houses." And there was like a big inventory of houses in the price range, and now there's just not. I'm not going to say not everywhere because you can go buy 3, 4 acres of farmland somewhere and build your own, log cabin, and you'll be okay. But it's just, it just depends on where you are. But
You know,
like in my area, that is happening. That is
yeah.
happening.
You
Construction
know,
companies are coming in and buying houses and flipping them.
I feel like there's some smart things we could probably be doing, like heavily taxing second home ownership and beyond, right? If you have one home, your primary fine, but let's start taxing second, third, fourth, fifth homeowners that are little mini landlord systems. Put more burden on them, so that's a little tougher, and then use that money to build more housing.
Yeah.
I think it's and then and lock some of these housing out from corporate ownership or private interest ownership, because it's kind of creating two classes in the country. There's the owners and then everybody else. And I
Hmm.
think that's accelerating our departure. And I think anything that doesn't come with first looking at, like, you can go to we used to live in a lot, Jan, I used to live in Los Angeles, and you could drive down many parts of LA and find whole neighborhoods where nobody lived there, right? I
It was
mean,
all
what a
empty, huh?
what
Too
a
bad we didn't buy
waste.
up all that land then.
Well, I mean,
Hmm.
it's just rich people holding on to
Yeah.
things, right? Hoarding property, hoarding neighborhoods,
Hostage.
and it just accelerates, right? Because
Yeah.
their homes go up, and they capture more value from that. It continues to the wealthy get wealthier, and then they have the capital to buy up more land and build more things to benefit themselves.
And
So
I mean, there are
we're not,
mortgage programs that
yeah,
help those people, like, the 1031 exchanges where you can buy a house, fix it up. You could sit on it for a little while, sell it, take that equity, buy a new house, but you don't have to take any capital gains on it. You just buy
yeah,
a new house with that money, and then that house values up, and then you sell that, put it into the next property. You can do that as many times as you want, and you never pay capital gains until the final sale. So that helps them continue to buy. No, I mean, it's a great program for investors, but it's one of the things that gives them a level up as well. But that's not. I mean, it's not a bad thing. It's not a good thing. It's just the way that it is right now. So,
yeah. I
uh,
think there's a lot of policy changes that need to be made to provide access, because there are people, a lot of hardworking people that can't afford rent of the same price that would be their mortgage. They just
oh
can't get
yeah,
approved for it, and they can't get the inventory for it. So,
even
I
to get an
think,
apartment,
yeah,
you need
well,
a
yeah,
roommate.
yeah, or
You
depending where
know,
you live in 4 or 5, like it really depends. But yeah, I mean, I don't think anybody's got all the answers to that, but I think
no.
I haven't seen anything recently that's going to help anybody yet. I mean, it's been zero things um, helping, and I think it's going to get. I think it's going to get worse before it gets better right now. But
Yeah,
hopefully,
I mean, I feel a
hopefully
little more
something moves.
optimistic about it. I actually do. I actually feel a little bit more optimistic about it. I think things are going to level off a little bit. I think the inventory, I feel like the inventory is going to level out. Like people are starting to drop the prices of the homes a little bit. Jay and I saw
Mm,
that just this morning.
yeah.
Things are sitting on the market more days than they used to, even down here.
There was
So
a
I think,
75 $1,000 price reduction on a really cute little 3-bedroom, 2-bath
Yep.
house that Kerry's going to be looking at for me.
Yep.
I
Immediately
think,
after this podcast, actually.
yeah, yeah, actually, it's truth.
Well, what all drives that optimism? Like you say, you think it's gonna. Is it just price decreases, or what do you think is gonna help
I just think because that's,
accessibility? And
when I attend my meetings, whether it be my mortgage meetings or my real estate meetings, there are people that are in the meetings that punch numbers and do projections. And it's not just me guessing it, but I'm seeing it more and more in the behind the scenes meetings and stuff like that of what of what they feel the trend is going to be. And it's not always 100%, but I mean, it's pretty close. And I just feel like, it's a challenge because we had rapid appreciation in homes. And
right,
it's just now it's starting to level off again. I won't say it's the balloon that busted up 2008, 2009,
that's what I was gonna ask
but
you. Yeah,
because I feel like it's not as blown up as that because mortgage regulations tightened and didn't allow as many no income verification loans where people could just buy things and say they make money that they never made, which is why there was
right.
so much foreclosure. So I was in the middle of all that mess. Thankfully, the company I was with only did A paper, which was like A plus credit loans. So I wasn't affected by that as much as a lot of people. But
I lost
I
my
think
home
it's
during that time. That was a really rough time. That was no
yeah, a
fun.
lot of people did because, like, there was a lot of lending there was just a lot of, unethical things
Was
that were
un-
happening.
unscrupulous
They
Yeah,
and
they were
unethical lending.
promising people things and that actually helped restructure the mortgage industry and make it like the restrictions tighter and it made it more accountable, which I
Yep.
was glad to see because my partner and I at the time and the mortgage company that we had, we said, oh, we just looked at each other. Every time somebody would do one of those loans, we would just be like, oh, that's going to come back and haunt them. It just is, and we just said, well, we're glad we're not doing that. And we were like one of the last stores open during that time. And we just refused to do them. We just knew it was going to be a problem. We just knew it was going to be a problem. I mean, I have a finance background. That's what I went to school for and business. So, I mean, I just knew
Carrie's a
it
smart
wasn't
cookie.
going to
She
be
reads
a.
she
yeah.
reads books and knows things. A
I
lot of
do read
things.
books and know things. He laughs at me. He's like, can
No,
I
I'm
take
not.
this book? I'm like, are you going to bring it back?
I have a personal story from 2008. I had a very safe mortgage, but I did go through like a divorce and I lost my job and there was like some turmoil there and I fell behind a couple of payments. I actually was on a payment plan. I was almost caught up completely. I think I was caught up completely on this payment plan, but I was on a plan. And this was like 2009. The markets crashed. Everything was
Mhm.
terrible, but it wasn't a very expensive mortgage. It was getting it paid back. I was working, and then one day I just got a your house has been sold foreclosure notice. Called Bank of America, who held the loan, and they said we're sorry, you just got looped in with a bunch of other people.
Oh,
Well,
that was a big
thanks.
thing. Bank of America had to pay a lot of people. They had to forgive a lot of loans, like
You were
equity
on a
loans and
payment
stuff.
plan and they sold your house?
They sold it. They didn't even give me a foreclosure notice. They
They
just
didn't
sold it.
send you a notice of sale. It wasn't
Nope, it was
because
just
normally
sold.
it's posted in the paper.
I
You might
got
be
nope.
able to go back.
I got notice from the new buyer that they're going to be renovating it and move out. And I
Bank of
called them.
America had I hate to say it, they had a big lawsuit back then and they had to pay off a lot of people's mortgages. They had to waive mortgages.
Yeah, I mean, they'd already sold my house, so I didn't have much recourse, but it was a mess, and it wasn't just the people
It
that
wasn't
like were
only
in.
you.
It wasn't just me. It was just like,
No,
oh, we're just
it was
doing a
a
lot of
lot of
paperwork on
people.
foreclosure, so we just looped you in because you were on a plan, and we just went. Everybody over here was just going to foreclose and sell their home, and
But
they
the
broke a
fact that
lot of
they didn't
laws and rules,
notify
and
you
That is
yeah.
insane. That is
with a
insane.
certified letter, you should have received a certied
Oh
letter
yeah, I
notice.
know. I
I
was on the
know.
phone with that. They had like a federal agency that was helping homeowners go through the thing. It was me, the feds, and that from that program and Bank of America on, and they're like, well, sue us. We don't know what to tell you. It's already been done. And the lady on the other line was like, I can't believe they're getting.
It's a
They're like, you're not
shame.
the only one, but they're getting by with this. They're just doing whatever they want. They don't even care if they
Yeah.
get sued. So
Yeah, it's
wow,
very it's
they wanted to dump inventory and make cash backs.
and the thing is PMI doesn't even help you. If you're paying PMI private mortgage insurance on your loan, it's not for you. It's not for you if you miss payments. It doesn't help you at all. It is a bank insurance policy. It's
Well,
just
Yeah,
that was
yeah, there's so many
incredibly
things. So many things.
we should get together again and go through more of it.
Oh, definitely. Definitely. There's so much.
Kerry, I wanna go to one more as we wrap up because we're coming up on time. I want to go to a different part of the podcast here where I'm going to call it the lightning round, the rapid fire round. I'm going to ask you really quick
Okay.
questions, and I'm going to ask you to be super brief in your answer, actually like 15 seconds or less. And if you're like pass,
Ooh.
that's okay too. Like literally, if you're like, I can't answer that in 15
Okay,
seconds.
no problem.
And then Will, jump in here when I'm done if you have any on your head, okay? On your mind? All right, here we go. Lightning round, Kerry Lopasky. Let's do this. Down payment or rate buy down?
Rate buy down.
Credit score deal breaker for 2026.
Credit score deal breaker.
Credit
anything
score.
under
What's a credit score deal breaker in 2026? A foreclosed house? I don't even know there is no wrong answer. This is
It's
just
going
one
to
of
be
the.
all about your score, but if there is a foreclosure on there, there has to be a certain amount of time that's passed, usually at least a year or two before they can even look at you, depending on the lender. That's
Got
why
it.
a mortgage broker is good in this case, because they have a multitude of lenders to go to with different programs for people who might have problems just like that. Okay.
Is 20% down a myth or a must?
In today's market, I feel like it's a must if you're worried about income, because that PMI could destroy your debt ratio, that PMI payment, and you're stuck in it forever until you refinance. Unless
Okay.
you go FHA. Now, if you qualify for FHA or VA, you could put 3% down, between 2 and 5% down on those, and on VA, sometimes no down payment. So I would say, if you don't have the money, you can't lose either way.
Okay.
But definitely if you can buy down the rate, you can save a lot in interest if you're going to keep the loan long haul. If you're not going to keep the loan long haul, then do the down payment.
Next question. Florida versus the rest of the U.S. Who
Yeah.
wins in home growth this year? Just your opinion.
Florida is always growing. I don't know. I feel like Florida
Okay.
and
That's fair.
rural areas.
Florida
I
and
think
rural
we have
areas.
the USDA loans now, and a lot of people are going into growing their own vegetables and having farms and going, organic. And a lot of people are getting into that now. I mean, people laugh, but there's a lot of land being bought up right now.
Oh, for
Different
sure.
places.
Next question. Buy now at 6.5% or wait for 5.5% while prices go up another $40,000. Buy now. Got it.
Just buy now. You can always refinance. Don't risk it going up.
Next question.
If it's one thing we know, the world is uncertain.
Totally.
6.5 is a bargain. If you went back in like the early 90s,
Yep.
late 80s, people had 15%.
Oh, yeah. That used to be the standard too.
So 6.5.
Wow, this weren't some expensive.
I would say look at your house price. Keep the house price lower.
Next question. Cosigner, a great way to get a house or a great way to ruin Christmas dinner?
A great way to ruin relationships. And a cosigner, a cosigner isn't as good as a co-borrower. A cosigner is somebody that backs the loan, but it doesn't help you qualify for the loan.
Okay.
You qualify for a loan with the co-borrower because you can use their income to qualify. And if you're both living there or you're both choosing to use the home.
I've got one.
Go for it, Will.
This is topical, so we can stay fresh and hot. Okay. Greenland or Venezuela? Which new American territory would you move to next?
Greenland. Well, I don't like the cold, so I don't think Greenland. And I'm a homebody. I'm a homebody, so that's a bad question for me. I think Colorado. So I don't think we've
annexed Colorado yet. We're gonna work on that next. We got some troops heading that way.
Going on in that market, really.
What's the one document that always delays a closing at the last minute?
Expired driver's license.
For real?
Whoa, interesting.
A lot.
That is interesting.
Because people don't. There's only 12 months in a year. You got to think about it. People's IDs expire, and people cannot find their social security cards.
No,
people find your social security cards, know where it is, because you have to provide a copy of it. And you can go online and request a copy, but it still takes a while to get them. You can go to ssa.org or .com. I can't remember which it is, but you can request it. Okay. But driver's licenses, expired driver's licenses. Other things are if you have to pay off a credit card or something like that to qualify for your loan, and you're waiting for the balance to show zero. Like I had one loan where I needed a statement or something from the credit card saying that you not only that you made the payment, but that there's a zero balance, and that it delayed the loan for like a week.
Totally. I've been through the lending process a number of times. If something can and will hold it up, whether it's a discrepancy in your paycheck or missing information, it will.
And it seems like the stupidest thing, but it's something people don't think about, though. It's not on your radar,
Right.
and that's why I think it's one of those stupid things that you don't realize, and it can hold things up.
So closing it out, I don't know, anything you want to add, just that you wish our audience is everybody from buyers and sellers, people that are thinking about buying and people that are thinking about selling. As a mortgage expert and as a real estate expert, you know how much I respect you. Anything you want to add or just throw in there?
Same. I would just say, know the person you're working with, have a relationship with your mortgage broker, have a relationship with your realtor, because that's the person that's going to take you under the wing, keep you safe from crazy things in a contract happening, keep you safe from making sure you're not getting bombarded with origination fees in your lending. There will be some fees because, I have to get paid. The bank has to make money. So there is a reasonable amount of fees. But if somebody's coming at you with 6% origination fees, make sure you know who you're working with and that they have your best interest at heart and they know your story. Like I said, how long are you going to be staying in the house? 5 years? Or is this a long haul thing? You have to know your client, talk to them as a real person, know what their family intentions are. Are the kids going to live there later? Are your parents moving in? Like, what's the situation? Let's know the whole story so you can find the best fit. Just have a relationship with your bank, mortgage broker, or realtor.
That's
Good
a perfect way to
relationship.
end this.
Well, if you
That's my-
plan, I don't know if you plan that answer, but that's why I named
No,
my
I didn't.
business Best Fit Real Estate, is because for that very reason.
Yeah,
Awesome.
really, because
Well, thanks so much. Thanks so much. This was great. Carrie, Jay,
great.
appreciate
Thank
the
you.
time. And we'll do it again. We got, obviously, there's more to talk about, and would love to have you back, and we'll do this all over again.
Yeah, I had to thank you so
questions,
much.
I don't know if you have a way they can email you. If they have questions, we're glad to answer anytime.
Yeah.
So,
Will, can we make sure we get, I want to put all of Carrie's information.
Oh yeah,
and
we'll have our you can see our website, Carrie's information, our information, ways to connect to us directly, all in the notes here and the video overlaid somewhere around here, and then we'll have it all for you.
This was incredible. Thank you so much, Carrie.
That's right.
Questions are free.
Thank you so much, Carrie.
You're welcome. Thanks, guys. It's been
All
fun.
right. Okay.
Talk to you soon.
Bye. Thanks, everyone.
Bye.
Bye.